Hey, hey, hey. Welcome everyone to Drippy Verse. So I'm excited, so excited to talk about this topic. I've been thinking about making this video for a while, and finally, after all these years, I have 5 do not do these while scalping mistakes to avoid at all costs if you want to save your account. So let's dive into these today. So make sure you have your pen and paper ready and take some notes. And also, I am going to show my own notes. My handwriting is the best in the world. So if you want some autographs and stuff, just let me know. All right, so let's go. So, first and foremost, on the right side of the screen, depending on how YouTube shows it or how you view it, you will see the notes. Okay, so I'm gonna narrate them while I'm talking about them. So it's okay if you cannot read it, it's fine. These are just for my purpose and just something to look back and read if you can. All right, so let's talk about these. First and foremost, do not turn your scalps to swings or intraday positions. Do not overstay your welcome on these trades because this can get nasty very quick, especially for beginner traders who oversize on their trades and they do not have habit of cutting their cutting their losses early, small losses, and do not respect their stops. This is for them. So do not turn your scalps to swing positions. Get out when the momentum is fading. So let's look at an example here real quick. Let's say you are a breakout trader, right? So you're looking at a breakout of this level. So market just open. This is the break of high of day here, right here, 9:30. We had a high, market dumped, and then we had so break of high of day. Let's say you are a breakout trader. You look at this trade. Now, what would be your stop loss in this case? Where would you enter the trade? On the break of this level, right? So on a smaller time frames, now I don't recommend people to use 1 minute time frame, but something like 2 minutes time frame, I think I use it personally as well. Sorry. Yeah. So on this trade, on 2 minutes time frame, let's look at this now. So what I mean is that then what is your stop loss here? So in this case, your stop loss would be somewhere around this candle. So let's say that you see this candle here, and I mean, this is almost impossible to enter actually this trade. So this will be a difficult scalp, right? So let's say that you enter this trade on this candle. You see the breakout and you enter here. Now you start to see that we are unable to break and clear through this pre-market, gap down here. You clearly see it. We have moved quite a bit from this level here, from this chop, and then it went down, and then we had a big move here. Let's say looking at this, you are a momentum scalper, you enter here. Now next, you start to see this wick here, and then let's say that your entry was perfect. Let's say even with the perfect entry, you enter somewhere around this candle. When you saw the break, you entered here, and 3760 to 3761, let's say on SPX, and you're trying to scalp it, right? So what can you do when you see something like this? Momentum is fading away right away. When the trade is not going in your favor, when you don't see next candle being green, instead the price action is stalling here, get out of the trade or reduce your position size. Because let's say that you are in this trade for a while. First of all, theta decay and IV crush will start to affect these premiums. It's around 11:30. Theta will start to kick in somewhere around 12:30, and everything. Sorry, I got Amber Alert here. Everything goes wrong when you're recording a video. Your dogs will poop, everything. So if you want to become a YouTuber, think hard. All right. So first and foremost, when momentum starts to fade, always be careful. Another example of this is this one right here. So this was somewhere around 1 o'clock, right? And you notice that again. So let's say you enter on the break of this level now, for example, just for sake of breakout trader. You're a breakout trader. You enter on the break of this this area right here. So let's say you enter on this candle here. So this is actually a really good entry on 2-minute chart, because you wait for a pullback, and this is a EMA support. So very good entry here. And then you start to get into this trade here, and you see this candle. So now a lot of traders, including me, when I was starting out, would have held this for longer than I should. So what is yours, like, what's the plan here? Let's say you do hold this, and when you see something like this, you start to trim your position immediately, because even if you enter here, this is profit. Let's say you entered 37.52. Let's say your profit here, this moved 10 points up from 37.52 to 37.62. So this is a good scalp, 10-point scalp. Let's say that your target was right here. Let's say this was the previous target. Now, when you start to see something like this happen here, get out immediately. Do not wait, because at least trim the position. Scale out real quick, because what will happen is next thing in this case, let's say it worked out, the EMA support and everything, but for sometimes it might fail here. And guess what, buddy? Once it's here, you didn't take your profits. Now you want to see the gains back. So always remember one thing, that unrealized gains are not gains you had or you have. Unrealized gains are something which you didn't sell. So in your mind, when the trade starts to go against you after taking you had some decent gains, so, and you start thinking about from a P&L perspective, right? Do not think from a I will talk about this topic a little bit in detail as well, but do not think from a P&L perspective, because you are looking at the market and you're looking at the price action. When it starts to go against you as a scalper, get out, because next thing you know, it's down, and you don't want to be in that situation where you don't cut your loss because you think it will come back up, and just cut it, re-enter later if you see another trade. Okay, so, and given if you're trading 0 DTE, let's say another example here, right? If you're trading 0 DTE contracts, for example, you see this price action here on SPY and something like this, where you see that SPY is in this range, right? So you are this is a different type of pattern, right? There where you were trading breakout, right? So now you see that, and this is later in the day too, right? It's 2 o'clock. So there's very high chance that SPY has made a big move, right? Big move here, almost 180R move since it was in the downturn, right? So this is end of the day here on SPY. So there is a chance that SPY could just consolidate, right? It could still go up, but there is a chance that it could consolidate, right? So what do you do now? Now let's say that you are a range based scalper, right? So every support area here, this support 1, support 2, support 3, you will buy for the calls, and you will sell. Hopefully, if you're an experienced trader, that this is my ultimate profit target, or even this one, because your risk in this case is like nothing. You cut it right below it, and your reward is that. So 37.82, 37.95 in this case, roughly 13 to 15 point move to the upside, and almost like 1 point. Let's say you keep a stop here to the downside. So really good risk reward. But then what do? You always remember this is very close to expiration. So let's say even if you entered here, your premium, let's say, was $1, $2, right? And here it would have tripled by now, because it's so later in the day, you're trading 0 DTE. Now, as soon as it starts to approach, first thing is cut your position immediately. You met your target, stop holding them for a breakout, because just wait and re-enter, or just size down and maybe keep one runner or something like that, because there's a very high chance the move has already been made, and this is untested resistance area, so it will go down. Instead, think about what you could do is cut your position and think about shorting it if you start to see it stall, which it did on a 2-minute time frame, and it's extended as well already. So So think about that. Think about scenarios like that. What type of trade are you in? So your profit target will be according to that. When things start to fade away, let's say that you enter here for a scalp, and this is support area, so you think that, okay, I will enter here, this is a nice EMA support as well, and what will be my target will be somewhere here around here. But you start to see it stall here, right? And especially so late into the day, right? So sure, it could consolidate here, it could be a bull flag to move up, but this is an early sign to get out of your scalp position or start taking profits here. And when you start to see it not making a move higher, instead it start to start to stall here, get out before it's too late, before the profit is gone. So not every trade will be home run. Know the context of the day, know what time it is, and such and such and such. I can go on about this topic for a while. So remember that, do not turn your scalps to swing trades. Next one, do not enter trades without fixed stops and targets. Do not enter any trade, especially scalp positions, without knowing what's your risk reward. So let's take an example here, this breakout trade again, right? This right here, you enter the breakout. What's your risk reward in this case? Your reward could be here, depending on like what kind of market it is. It's choppy, so mostly your reward would be here. Like, you'll try to take profit around this zone, which you can see people did. There was indecision candle and then it dumped. So in this case, your risk is where will your stop be? Your stop would be right here, right here. So your risk reward is 1-to-1 in this case. So is this something you want to take? Probably not. I will not take this trade, because even in this case, I think risk reward is even worse, because this breakout candle, you would not have got it even on 1 minute. This is already 2-minute chart. So even if it broke out here, right, you would wait for a break, support, or if you're not even fast enough, you won't be able to catch this move. So if you're not, it's already here, it's already at the resistance, it's already at your profit target. Why would you enter this trade? Does it make sense? Because your stop is right here, your risk, profit target is here. This is the worst risk reward. You don't want to enter. You want to look for something which is at least 3-to-1 or 2-to-1 risk reward in this case, because these are 0 DT premiums. For example, if you're trading them, it's gonna be nasty. This gonna just ruin your account. So a better trade in this case would be something like that one I told you earlier, was this one right here, is right here. Okay. So in this case, you start to notice that this level has become support, right? This area here, and you start to see price again stalling, right? It's not breaking down, it's stalling. So you enter here, right here. What's your stop in this case? 37.80, the psychological number 37.80 right here. That's your stop. And your reward in this case is this, because there is chance that it could break out. There is a chance because market is uptrending, right? So there is a chance it could break out, so you can still hold. But in this case, at least you know that your reward is this. So at least 10-15 points of right around 3 o'clock as well. So key time. So things like that keep in mind. Things like that keep in mind. So if you enter a trade here, you cut right below it. So things like that are very important to keep in mind. And let's say that let's say here in this trade, you enter on the break. Let's say you get lucky, as soon as it breaks, you were watching on small time frame and it broke out, right? What do you do in this case? If it doesn't go against, let's say it dumped here, start to dump here. Let's say you had 2000 worth of contracts. Let's say you got 10 contracts for $200. And next thing you know, because it let's say you enter here, and next thing you know, because of this, you're down $1,000, and in your mind you never calculate the risk reward, you never did it, and now it's like, oh wow, I'm down $1,000, let me wait a little bit more, because what if it comes up, I can get out. But no, it might not. What if it doesn't come? You already at a loss. So you didn't think about this before, you oversized on your trade, and now you're suffering the consequence of this. So know what's your risk reward before entering a trade. Have a stop in mind and have a target in mind, because if you don't have that, then you're basically stuck, and you basically don't have anything to look towards. Like, you're basically on a hopium and assuming that this trade might work out in your favor, you might get 100% returns. Don't think about returns, you think about risk reward, think about the loss you might have if it goes against you, and size according to that, size according to your account size. There's a whole separate video I made on risk management, so that one is my most popular video, so definitely watch that video. Okay. If you're too afraid to cut losses, you are most probably oversized and you're noob, and you probably had more than what you should have, and you're probably going to burn your account more. So know your risk reward. Either set fixed stops, and sometimes risk reward is not something. Things move fast in a volatile market, and always think about setting fixed stop, like have your max stop that I'm not going to hold this position if it's down more than 25%, even if it's not hitting your support level, because theta decay can still eat your premiums, right? So have a fixed number in mind that, okay, my max loss on this trade is like $1,000 or XXX dollars or 30%, and cut it when it meets. So if you're not comfortable with that 30% loss, that means you oversized it. So let's say you're only willing to lose $100, right? So don't get like 30 contracts on SPX, because what that means, like, even if it goes against you for a second here, you're down more than your max loss, and now you're like panicking, and it's not a good feeling. So know that. Okay, just for small accounts, you should not even exceed like more than $100 contract anyway on SPX 0DTs, unless so that's why be very, very careful. Okay, so number 2 was do not enter without fixed stops and targets. Let's talk about number 3. Number 3, do not place market orders on wider spreads, and know what you're trading. Do not place market orders. Look at the bid and ask spread. What do I mean by that? So something like sorry about this. So something like this. No, look at end phase here. So sorry about that. Look at end phase. So this is end phase option chain here. 195 call is, the bid is 6.95 and the ask is 7.45. So the spread is $50 spread. Let's say you're looking for something cheap. Let's say you're looking for this one right here. What 217.5 call. Let's say you're looking at 215. Let's say like a good 1.1 versus 1.5 to $40. Let's say you place a market order, you get filled at 1.5. Now, if this thing goes against you $2, you're basically and you sell it at a stop, right? You already hit your stop at bid price. So mind the spread. But something like SPX or SPY in this case, right? SPY, sorry about this. So something like SPY has a really good spread. For example, this is something around the money, right? So look at this, 1.42 and 1.43 here, right here, 1.44, and look how liquid it is. You can see the chart clearly, but in end phase case you saw dots. That means it's not liquid. So yeah, so demonstrating my example of stops here as well. Now let's say that you were in this trade on the other day, right? This was the consolidation right here. So you can see it. You enter here at the support options as level. So option price 1.25, and this is still 1230. So this level is again 1.2, somewhere around this. But start to notice at 330, even though the price was at the same level, the option premiums dropped to 1.1. Why? Because theta decay, right? And IV crush as well a little bit. So things like that can matter a lot. So keep in mind when you set your stops that even though the stocks are in the same level, option premiums can drop big depending on theta decay. So always be mindful of that. So it's always be mindful of the spread. In this case, you can place 10 orders at market. It's fine because the spread is so thin. It won't matter. You can get out easily. But in case of end phase, if you did it, I mean, you're losing probably like 10 contracts. You lose, like, if you sell at market and buy at market, $1,000, just like that. So those are not really good scalps. Those are ones to size down. So yeah, those are the things you need to keep in mind with respect to that one. And yeah, so we're gonna move on to the next one here. All right, so number fourth is do not use same strategy for different setups. So this one is, of course, like, simple to understand here. So 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 what I mean by that is you have to be aware of what you're trading in the market conditions. First is that market conditions. So what I mean by that is in this kind of setup here, where it's late into the day, stock has made 180-hour move almost, um, in during the whole day, and now it's going to be a little bit choppy into the close, and it's extended on multiple time frames. So no, this market condition, but you also know that it's not going to sell off, because it's been showing momentum to the upside. The trend is to the upside, and you don't want to play the downside too much. you know you don't want to play the downside too much. Even if you're a reversal trader, you know that there will be support here and there'll be buyers on the EMAs. It's a strong uptrend, right? Even though it was oversold, it's strong uptrend. So even after being oversold, it actually came back up. So it's a sign of strength, and you don't want to get caught up in the reversal plays here. So know what you're getting into. So based on that, um, this setup means that your risk reward is, like, within this range you're trading. And something like a flag breakout, on the other hand, right? So you could call this one right here is consolidation level breakout. So right here, right within this range here, you can see that price, you know we had a big move here all the way from 37.22 to 37.70, and then price start to stall here. And since we did see significant sell off into the open, there is a probability that we're going to go down here, right? And what's the next support area? This is a thin volume. This is nothing price action here on the day. So next support area probably becomes around this right here. Right here becomes your support area. So in this case, let's say you are trading this swing trade. So now, sorry, scalp trade, and then you start to see here breakdown. Let's say you enter around top here. Let's say you're confident that, oh, it's not gonna break this level. So let's say you start enter here. So this is a clean scalp here. Even on the breakdown here, you enter. This is a clean scalp. So you need to be aware of this level right here. And you see again that you take some profit here, and then you wait. You see break it down again. Next stop is right here. So you need to be aware of these things when you enter the trade, that okay, I'm in this SPX. And so time also matters for 0DT contracts, because this is still early in the day. This is still early in the day. Theta decay will not affect. But if you keep holding these contracts, let's say you entered here for a long play, and you keep holding these contracts even after looking at this, guess what, buddy? This one candle will put you in loss, because theta decay is taking into effect. And let's say you got 3,800 call, or even higher 3,825, because you think this gap will be filled here, right? And you get higher contract because it's cheaper, and it's gonna be in a loss here as soon as you see something like this. So be aware of the setups. Not everything is a home run. You can get lucky one time on home runs, but usually they don't work out. So in this case, another example is this one right here. You're a breakout trader. So this was a good breakout on a 2-minute time frame. You can see break, retest on the EMA, and then you enter on this flag breakout, right? You enter in this flag breakout, cute little frag, and you see that what's the profit potential? It breaks the high of day, this one right here, but it didn't even reach here. So what do you do in this case like this? I'm sorry, this thing here, 1 second. All right. So yeah, I mean, like, your profit target becomes around this area right here, and you see price comes here, and then you see this candle. I mean, even here you see red candle right here, right? it's extended, you get out. I mean, this was a clean break, clean setup to take and then get out immediately. And what's your stop right here? You get below this, cut it. So respect the stop. Do this with one contract at a time. Once you start to respect your stop loss, once you understand your con size, things will be much more easier for you. um, and another thing is like, notice on a higher time frame what the market is, where the market is on a higher time frame perspective. So for SPY, we are in this range for a while, so notice that and think accordingly. Like, don't go and let's say, oh yeah, look at this, looks juicy right here, right? Like, you're a short, let's say you're a bear, you look at this price action, get rejection, and you're like, oh my, I'm gonna short it right here. Buddy, look at the price movement in one day. Big move. Why are you going to short here? This is a support. Notice on higher time frames where what is what, and you start here. Another great example is right here, this one. Let's say you were a bear and this is a good third time support, and we had a gap down, so it's clear that we might see sell off, right? Okay, so you enter a scalp position, and what will be your profit target? One right here, this demand zone, and then gap down. So it's a great risk reward, right, for a short side. But what happens? We see reversal. So you gotta respect your stop loss right here. You gotta respect your stop. So as soon as you see this, cut your position. Even though your thesis was valid, everything was perfect in the trade, sometimes this just doesn't work. Market is unpredictable, and those who stick to their principles, and those who stick to understanding that, okay, yeah, well, I had thesis right, everything was right, this setup was great, it just didn't happen to break out. That's fine. It doesn't have to work. You don't have to fall under the impression that my assumption is correct, so I am right and market is wrong. That's usually how you end up burning the account. So don't think that way. And last and but not the least is, guess what it is right here. Do not overtrade. What do I mean by this? Let's say you're a great scalper. You are like so good at scalping that you can make millions of dollars in one day if you did it, right? Let's say win rate is 90%. So does that mean you take every scalp possible? No. And why is that? It's because you want to save your capital for good quality trades. You want to save your money for something which, let's look at an example right here in the 2-minute chart. I see this happen there. Even on my Discord, a lot of people ask me this question all the time. Hey Drip, I will take this trade. Hey, I take this trade. Why are you trading candlesticks? This is a good example right here, right? This one. You see this breakdown here, and you see a reversal. People will ask me, I will enter short here. Why? We had a decent move here. Let's wait a little bit. Let's wait, see what the price is doing. At least wait until it breaks down or breaks out, right? And even if, let's say, you entered, like, why would you trade in this? It does not make sense. Just wait. Why would you trade in this? Chop. We had a decent move up. Market is deciding what to do. Like, hey, I will go long. I will go long right here. Why? We already had a decent move on it. Just let the market digest. Know that the intraday market also move in phases. There's reversal, there's consolidation, and then there is breakdown or breakout, and then again consolidation, then breakout, and then trend following, and then again consolidation here in this range. So understand that market does not either go up or down. There's phases. Even on higher time frame is the same thing. So for swing traders, for example, right, they will be looking at this 30-minute chart to see, okay, I will enter my swing position at 30-minute short right here on the EMA rejection, or below it right here with that as my stop. So this is a bigger move to the downside, right? So So stuff like that, you always have to remember that. Stop trading every tick. Like, I will trade this, I will trade that, I will trade this candle, I will trade that candle. That's not how trading works. You lose a lot of money this way because you had, let's say, $100 win and then you lost 50. You want to make that back, and then guess what? You lost 50 more. You want to make $100 back, and you keep going in the cycle and losing and losing and losing, and account is zero. So do not overtrade, even if you are the best scalper in the world. If you are, you know that you should not overtrade. Look for premium setups. For in this example, EMA breakdown here, you know, rejection of the EMA here and then breakdown. Look for key levels to break down and break out. So in this case, we had a key level breakdown here on SPY. We have been holding that as a support for a while here. You know, look at this. This level was acting as resistance, broke out. Now it should act as support. It didn't, and a breakdown. So now you enter the trade. So there are different ways. Know the key levels in the market and play them, and wait for the quality setups. Intraday also, even if you're a scalper, you can see quality setups. So what do I mean? Let's look at this example here. PDD. This was on Friday, basically 15th of July. So what do I mean by quality setups? Like these known setups with other traders will take. This is a pennant here on PDD. Beautiful, right? And notice the time of breakout, and we had this candle here with some volume come in, and this is the one to look to, you know, like intraday. You spot this and you wait to enter the breakout, right? You know, this has been consolidating for a while. Let's say that you wait for the breakout of this resistance area here, right here, which it did. So you could enter right there with the stop of this consolidation zone, and it never came below this, and if it did, you cut it. And look at how beautiful this breakout was. Another example is Chui, and sometimes they won't work. Sometimes these won't work, and that's fine. Like in this example right here, we had this bear flag here on the 5 minute. Let's go to the 5 minute chart on Chui. So we had this rising wedge pattern here on Chui, and you know, it took a while for it. It took a while for it to work, but it did break below this level, and then it started to chop. So in this case, the pattern didn't work, but you tried. You noticed the pattern. It wasn't working. It was chopping. You get out of the trade. Let's look at another example. This one would be, I want to say, let's say SPY one right here. This on a higher time frame. Let's go back a couple days. I had a decent trade on it on SPY. So I'm gonna find that one. Yeah, so right here. So SPY had a consolidating day at the key resistance level, and it broke out, broke down. So right here, even if here, like let's say you break off this level right here, right? So you enter your short position here at this level here, which is corresponding to this support, or even if you can do it right here. Yesterday's low, break of yesterday's low. A lot of traders do that. Clean setup, clean breakdown. So you know, you trade that. You don't trade this. After it has extended, I will short it here. No, you wait for a flag and you reject here, then you again trade it. Then you wait for again another consolidation right here, then you take it. So wait for patterns to emerge and then take it. This chop, what will you take in this? You want to trade every day? This do you really want to trade this? What is the setup here which you would like to trade? Let's say you enter short here, goes against you, gone. This thing gone in instant here, up, right? Let's say you try to go short here on the break of this, and again trap, up. Yeah, this is a great example. Like you see this candle here. Oh yeah, I'm gonna enter short at this candle rejection. Guess what? Done. When you see this, avoid trading. What is this? Garbage, low volume scalp. There is no way you will survive in this kind of market. You can get lucky. Let's say you were short here, you got lucky. Even then, you will not take profit because you want to see continuation, and then guess what? Up. So, days like this, avoid trading at all. When you see something like this garbage here, stay away from the market. So, avoid trading everything. Take a break if you lost. Let's say that you lost, take breaks. So oftentimes people have this, oh yeah, I lost on this trade, I'm gonna take another one, make it back immediately. Nope, your mindset needs to reset. Take breaks, avoid low volume days like this, and clean setups. So you don't have to take every trade every day. Just something which I teach on my Discord too is like, have patience to take a trade. Like on Friday, I wasn't watching big names like banks, so I didn't get into them. Do I regret it? A little bit, but it's fine. I'm gonna look for setups which I can trade. So in this case, I had this Amazon trade here. This was actually surprising, but yeah. So Amazon, we had this flag formation here. We took it for a little bit of profit. We get into the break at the high of day around here, and we got up right here. So decent profit target met, got out. This actually, we were hoping that we will swing it, but didn't work out. Nasty sell off. Not sure what happened, but very weird. But yeah, anyway, and again, this was a clean setup here on Amazon. Break of the day here, breakout of the day, and another clean breakout. So wait for quality setups. Like, you don't want to get into something like this. Like, what are you going to do in this? At least that setup is forming here, ascending triangle, which could break out to the upside. But I mean, you gotta be careful, man, in this market, especially because there's so much chop and there's so much fake outs and patterns are not working. So like in this case, this looked like a bull flag, but then guess what? Dump next day. So be very, very careful in this market specifically. All right, so these are the 5 things I wanted to talk about. Just to recap, number 5, do not overtrade. And then next one is do not use same strategy for different market conditions. Be aware of where we are on higher time frames. Do not place market orders on spreads which are super wide. Save your capital for like higher liquid option chains. Do not enter without fixed stops and targets. Respect them. Even if you enter them, respect them, and do not turn scalps to swings. If you are in a scalp mindset, scalp it, and at least take some profit. Even if you turn it into a swing, let's say it works out great, you at least take some profit and then leave the runners. Okay, so those are the things I wanted to talk about. Have a nice rest of your day. And if you like this video, if you like the content, please make sure you subscribe and like this video. It does help out a lot, and I do like when people show appreciation, because that's why partially I do it, because I want to know if people are liking the content. Should I make more stuff like this and go in depth, which people don't talk about? A lot of traders have really good YouTube channels, but sometimes I feel like the in-depth content is lacking, and that's what I strive for. So if you're liking that, please make sure to subscribe, and I'll catch up with you guys later. Thank you.